Hello, everyone. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market report. John, with your little bebop shuffle. I'm looking at supply. It's ticking up. This is why we do the weekly reports. It's at 7206, but show me that chart.
Yeah, no, it's that's up 4.6%, Noah, from last week. I mean, this is the biggest pop in supply on a weekly level we've seen since July, when the market was just starting its whole reopening ball game. So, it looks like supply might be coming back here fast and furious.
Yeah, supply is definitely turning the corner. It's got a little gap up candle going on over here to bring a little stock trading term into the whole mix. We're going to see where it goes and whether or not this is a meaningful rise, but everything just pumped up in the last few weeks. We'll show you in a second. Let's move on to the measure of demand. The pending sales came in at 47.58. Johnny, show me that chart.
Yeah, so not to steal the thunder away from the increase in supply, but I mean, pending sales is up 5.5% from the week before. So yeah, it's great to see supply coming on, but pending sales once again eclipsing it. That's 5.3% if you're scoring at home from the week before. Just another phenomenal increase.
Yeah, and again, if we thought March was just record activity, April is now the new record for activity. It's just incredible. We're seeing records unfold. Let's go to the dashboard on UrbanDigs and let's take a look at the weeklies. I'm looking at supply came in at 538, slightly ticking down. Doesn't tell the full picture of what really happened over the last few weeks. But Johnny, show me that chart.
Yeah, it's a slight tick down, almost 2% from last week. But really, the story here on adding supply is, we're averaging over 500, new units a week for the last sort of month. So at some point, those are going to start to accumulate, and that's, I think, what we're seeing in the overall supply number.
That's exactly right. Let's move on to the 1 week measure of demand. Contract signed in Manhattan real estate came in at 399. We're just in ludicrous territory here. Show me that chart, Johnny.
Yeah, we're full on plaid here. I mean, we've talked about it as gangbusters. We've talked about it as bonkers. We're one short of 400. It would have been really cool to say 400, but we're one away. But I mean, goodness gracious. I think last week we mentioned that, 6 out of the top 10 weeks were, in 2021 so far. Now it's 7. I mean, it's an incredible amount of deal volume in an incredibly short window of space. It's amazing.
Yeah. John, before I go to the charts, we got a really cool breakdown. Look at the 1 month trends. Okay. This is going to paint the picture of what's really going on here. Everything bumped up. All right. And that's why supply is going up 23.48 on supply. And if you've been watching this, you'll notice that that's a big increase. Again, 36%. Contract signed 16.44. A lot of this activity is kind of right in this period right over here. Right. Yeah. So we have, as this stuff gets filtered out and as the old stuff gets filtered out and as the new stuff comes in at the pace we're going, these are going to stay at these levels. That's why we look at the weeklies to see what's going on. And the weeklies are just on fire. So that's telling me that we're going to remain at these crazy levels. As far as I'm concerned, if you're a buyer or seller in Manhattan real estate, it's just an extremely active marketplace. So you have to adjust your strategies accordingly until things change.
Yeah, and I think if you're absolutely right. Now, if you look at the very bottom left of that little ticker, that's the market pulse, and it says seller's market. And we've had a number of conversations with agents who have been, having issues with clients, and they're still dealing with clients who think there's a COVID discount, and they're waiting for that to come around. So take a look at this dashboard. Take a look at all that green, and you're going to have to sort of re-educate your seller or re-educate your buyers at this point that that distressed market is not happening right now.
Yeah, if you're a buyer, if you think there's a COVID discount, you're not listening to our weekly shows. So you're not looking at the data and you're not listening to the shows, and you're kind of in your own world. That is how a market works. Those people are out there. It is okay. It's just how it works. They'll just miss the market. That's how this works. So listen, let's go on, because we're going to break down all of the contracts that are inside. We got a lot of contracts inside. I believe there's like 4,600 of them or something like that. All of those are going to close soon, Johnny. So let's break down those soon to be closed deals and see what's going on. Okay. Now, when I break it down by bed count, all right, 11.5% are studios, 33.7% one beds, 32.3% two beds, 22.6% are three beds. And the main theme that you guys need to understand from this versus a year ago, right? Because it's always good to kind of compare, is that the studios and the one bedrooms in terms of the piece of the overall pie are going down. And the 3 bedrooms and the 2 bedrooms in terms of the piece of the overall pie are going up. So in other words, buyers are buying bigger properties. And this is just another data point to show that message out.
Yeah, that's an excellent point. And I just want to point out that the year over year comparison is still somewhat valid because we're talking about pending sales here. So these are things that sort of go into the pending bucket and we wait for them to be closed. So even though a year ago is in pending, that's okay because it could have been in pending for quite a while and it's acceptable to count. So, but it's an interesting data point nonetheless to see that buyers are buying bigger.
Yes, exactly. Now we get to see it. So now let's look at the price points. Right? Kind of, it's going to tell us the exact same story, but we want to draw it out for you guys, right? When I look at these price points, under $1 million, this, where was this over here? These guys are just they're going down. They're going down. Okay. These higher expenses, 2 to 5 million, 5 to 10 million, and 10 million plus, these guys are going up in terms of the piece of the pie. Okay. In terms of piece of pie. For example, okay, if I were to look at the 5 million plus sector, that is 7.4% right now. A year ago, it was 5.6%. When I look at the 2.5 to 5 million sector, that's 21.3% now. It was 19% this time last year. Okay. So those guys are ticking up. Meanwhile, all of the lower end guys are ticking lower. So again, it's just another look at breaking down the pie. And if you extrapolate this, John, if I could just skip right ahead to your chart and extrapolate this to what's ultimately going to be closing, it brings us to this pipeline pricing chart. So John, explain what this is and why this might be a peak in terms of what price action is going to do down the road.
Yeah, no, I mean, so look, if you think of pending sales as sort of the pipeline of what's coming down the road, let's look at the things that make that up. And so each of these bars is sort of a date and time, a month, right? And it represents the contracts that were signed on or after that date. So the very first one there is November 21st, November 2020, it should say. Right. And the prices, the median last asking price back then was 1.199. And you can see every month after that, it's basically ticking up. So, fast forward to April this year, and we're now at 1.25 for all the deals that were signed on or after April 1st this year. Median price is 1.25. And so that goes back to your point, Noah, which is we're seeing larger places. And, one of the other interesting points is that, when this market did reopen, it was not the larger units that led this rally. It was really the under 2 million, under 1 million sector that really got off the ground first. So they sort of did their part. And then it was like October, November, when the 2-3 bedrooms started really kicking into high gear. And that's what we're seeing in the data now. And those are the kind of things that are going to be influencing the quarterly reports that are be coming out in June.
Exactly right. Exactly right. Now, this is just important notes. These are last asking prices because that's all we have. We don't have the closing prices yet. Right. So we are seeing the rise in that. So that's one tell. Another tell that we could just kind of assume, John, right? Because this is going back to November, the spread between bid ask in November and December was wider. Okay. If I had to describe what that spread has done over this period of time, it has gotten narrower and narrower. Okay. Obviously this period of time is where we are right now. Narrower and narrower. There's almost no discount now. And that's the spread getting narrower and narrower as December, January, February, March, April has put us into this record territory today. The agents I'm talking to right now are telling me that the COVID discount is literally evaporating before our eyes. And that's just what's happening right now. So when I think about these prices and the fact, well, these are last asking prices, like, aha, right? When I look at median sale price on UrbanDigs right now, okay, median sale price, it's at $1,070,000. It's at $1,070,000. Okay. So we still have some negative pressure in the near term, but as we get to the end of the year, 1.250 today, if that discount is minimal, that's what I'm saying. Extrapolate that discount today is minimal, then we're going to be having median sales prices in the high 1.1s or maybe even in the 1.2s down the line. That's how we're doing this. And that's how we're looking ahead. What happens when the headlines hit that these prices are rising? What do the buyers do? So
that's a fantastic point.
I love it. Thank you, John Walkup. I am Noah Rosenblatt. We're both of UrbanDigs. Great stuff, John, on those charts. Please remember, guys, if you have questions, we got answers. Visit our forum. Other than that, this has been your weekly Manhattan market update. We're from UrbanDigs, and have a great weekend, and we'll catch you next time.